Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This simply talks with another video, and this Sunday video corresponds to three companies which are big in data centers. So, some data center companies I'm bringing you, which could do well over the next 3 to 4 years. This is a market in which you invest over the next 3 years rather than trade into, and that's why I'm bringing you with companies that could do extremely well over the next 8, 10, 15 quarters. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do it with their own due diligence and research. And I'm not in favor or against any company that I talk about. I'm not a member of the NSE and BSC, and that I'm not a portfolio advisor. Whatever discussions I have with respect to the markets and stocks is purely on the basis of my experience into the market over the last 12 13 years being a retail investor and trader. So whatever decisions with respect to investments you take, kindly do consult your financial advisor before doing that, because it is laden with market risk. Now, before I talk about these companies, a small request is, can you support me on Patreon? Once you do that, help me grow the channel, help you also ask me questions, seek out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, a number of podcasts on global and Indian economy, on global markets, on how global markets and economies affect India and where are the markets headed, etc. Analysis on the different companies individually, whatever companies you ask for, updated watch list dedicated that would come up ideally every bi-weekly or at least monthly, and whatever queries you'll be having, I'll be answering that. Now, in order to understand about these companies, let me take you to the screener website. So there are three companies that I want you to look at, and three companies I have brought to you. Blue Star is one, Anant Raj is the second one, and Keynes Technology is the third one. Let me begin with Keynes Technology. So this was incorporated in 2008, and it is a leading, you can say, end-to-end IoT solutions enabled integrated electronics manufacturing company. But apart from manufacturing electronic products like white goods products across the board, what they also do, plus you can say electronic products across the board, what they also are doing is providing spaces for data centers for this big conglomerate and companies to keep data, and they are earning revenue through it. And this is becoming a big factor altogether for such companies which are into different domains, basically when primarily when they began, but currently have expanded their base into the data center theme. 35,000 crore market cap company. Yes, the PE might look extremely stretched at 190. I agree with that. And the stock looks extremely expensive. But since this is a 3 4 year theme, what one can do is, in distress situations, in bad times, one can accumulate such companies. So the PE has come down from around 230 to 40 to these levels after the results. And once you look at the results, then you'll have an understanding as to why I believe that such companies could do well even going forward. So if you look at the consolidated numbers, what they have done is, so on a consolidated basis, the PE is around 150. And if you look at the PE ratio, it has dropped sharply after the results which came out recently. Its highest PE was around 220. It has dipped to 150. And since its, you can say, listing, the listing was in 2022. The PE average is around 124, 125, and currently the PE is around 150. So any 10 to 15% or 20% dip from here, if the market remains in such sluggish mood, if you get chances to buy the stock below 5,000, closer to 4,500, that would be very decent levels in my opinion. Again, do consult your financial advisor before taking a call. But in terms of the numbers, they have done extremely well in the September quarter as well, doing around 570 crores versus 360 crores. They had an operating profit of 49 crores versus 82 crores. So 82 crores this time around, which is a jump of 63%. Just margins remain stable at 14%. But look at the expansion in operationally, etc. So eventually the net profit was around 60 crores versus a net profit of 32 crores. So doubling of profitability here on the bottom line, and that's why the EPS has doubled. Even last time around they did 51 crores versus 25 crores. So if I double the EPS for the year, we are looking at a scenario where the company might end up doing an EPS of around 34 rupees or so. An EPS of 34 rupees for a stock at 5500, 5550. And if I calculate that, we are looking at a situation where we are at around 160 or so. So, really, in my opinion, it's not that we are looking at a scenario where the company is ultra expensive. Again, the second quarter is much better than the first quarter. That is what is always said in terms of their sales. So the EPS could be around 40 rupees by the time the year ends. And in terms of the shareholding pattern, also the company has done well. So 58% is with the promoters. FIIs currently hold 15%, so good chunk is with the FIIs. DIIs hold around 16%, and only 11% shareholding, 11.25, is with public, in which 1.66 is with the large investor. So around 10% is the free float in the stock, and that is why you see huge gyration in the stock price whenever there's movement on the stock on any news or results, etc. So very decent company to look at. Again, I don't know how much the returns would be in 4 years, because the levels are elevated at the moment, but the theme altogether is extremely promising from a 4 year perspective. So that's one pick from my side. The second one in this list is Anant Raj. Now, Anant Raj is a slightly smaller company at 25,000 crore. This was basically a real estate company that did well in the real estate domain over the last, you can say, 30, 40 years, and over the last 25, 30 years. And then they have, you can say, transformed their business into providing data center, dedicated data center systems for all the IT companies, and all the companies that are the new age companies, etc. And this business began altogether over the last 3 years, and now it has taken a very good shape, and currently they are earning decent, you can say, revenue from the data center domain and expanding big time. So this is a company that is in my portfolio at the moment, so that's a disclaimer. But the stock has not moved much. So if you look at it, the stock was trading at around 660 in October. It has moved up, but overall the returns have been big over the last 1 year. But over the last, you can say, 3 4 months, it has been, you can say, sideways to slightly up. And if you look at the numbers, again, huge numbers from Anant Raj as well. 513 crores versus 330 crores. So that is a jump of 60% in the sales. In terms of profitability, from 80 crores, the profit has jumped to 113 crores. That's a 40% growth in operating profit that we have seen. And in the bottom line as well, from 71 crores of, you can say, from around 60 crores of net profit in September of last year, 206 crores. That is a jump of, I think, 70% in terms of profitability again. And even if I take out the tax portion, then there's a jump of around 50%, 76 crores of profit before tax, versus this year we have seen 114 crores of profit before tax. Again, another of this theme, and this sector altogether is growing at around 35-40% on an average. And that is why, in this sort of an environment where companies are, larger companies or nifty companies are giving 0 to negative% growth, and we are seeing that growth is not coming through, there are sections of the market that are doing extremely well, and that is where I want your focus to be. Although it does seem extremely risky with the kind of valuations that they are trading in. Anant Raj, for example, is trading at 70 times, 72 times. You have Canes trading at around 160, 150 times, and even Blue Star is trading at around 70, 80 times, which I am going to bring next. But there is where the growth lies, and that is why these companies are having or these stocks are having such a chart that if you look at from March 24, which is not a situation where the market was at lows, but from March 24, you've seen the stock nearly double, more than double from these levels, and it's continuing to perform. In terms of, you can say, shareholding pattern, again 60% is with the promoters. FII hold around 13%, and remember, FIIs are selling big time into virtually everything that they are getting their hands on. But at the moment, these are the themes, say pharma, mid cap IT, data center kind of themes, where they are looking to hold on to the stocks, and this is giving me confidence. DIs have increased their stake from 1.5% in December of 23 till now in the last 1 year to around 6.7%, and public shareholding has reduced to around 20% overall, in which there are around 2.5% is with the large shareholders. So around 17.5% is the free float, and the company is doing extremely well. Third in this list is Blue Star, and Blue Star is a very decent white goods companies as well. A couple of days back, I put up a video on Blue Star exclusively, and this is a big data center kind of a theme that is emerging, because the company has come out and said that over the next 2 years by FY26, they'll have a dedicated system altogether for providing data center, you can say, facilities, and they'll earn big from there. There is some chunk of revenue that is coming through at the moment. So you have white goods, you have commercial ACs, you have home ACs, and there are other Blue Star products that the company produces. Plus, this data center high, you can say, high margin business would come through. I think the company is set to do well. And what is different here from the other two companies is that after a very stellar numbers, very good numbers, the stock has fallen. So the PE has reduced from around 87, 88 all the way to, it has now come to around 70, 68 levels. And if you look at the numbers of Blue Star altogether, 2280 crores of sales in September versus 1890. So you look at it in any perspective, the growth of 20% in sales in such a competitive market, because they're major businesses in the white goods and it's an extremely competitive market, and yet they are maintaining 18-20% sales growth. This is commendable. And if you look at profitability, yes, from 123 crores it's grown to 150, but even there, if I see, they have done well. So we are seeing a situation where 123 has become 150. So operating profit has grown from around 123 crores. The operating profit has grown to 149 crores. So if you look at it all together, the growth has been around 21%. And on the bottom line, if you see, from 71 crores, the profit has grown to 96 crores, which is extremely good. 35% growth in profitability. So overall, very decent numbers from Blue Star. And even if you look at the shareholding pattern again, FIIs again have increased holding here from around 11% earlier, if you go back to June of 23, all the way to 18% now. It has been consistently increasing. The IAs are holding firm at around 23%, and public shareholding again has reduced here, which is a very good sign for a company you want to invest into. So this is the third stock in this theme. There are other stocks that are into the data center theme, but this is a theme for the next 5, 7, 8 years, and that's why you need to pick top quality companies that are doing well in their previous domain, that have been doing well since inception, and now they are, you can say, going into a different business, or a slightly different business, and you know the pedigree of the company, and that's why I picked these three. So these are my picks for this Sunday video. So this was a video for these companies. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. And kindly support me on Patreon. You can be a member on the WhatsApp as well. You can email me for that. This portfolio access services I have removed for now, and I'll bring in other kind of videos that will be available for all of you. Exclusively for Patreon members for free if they get the membership. but you can buy those videos separately. I'm trying to make those videos so that your investment and trading journey become better. That will be available on Patreon going forward. Thank you.